Many people interpret the government's tax declaration as an acknowledgement of the cryptocurrency industry as a new asset class. So it's basically confirmed now. There will be taxes issued on cryptocurrency. The question is, how will these taxes be calculated? What would be the basis for them? Should you be worried? Well, look no further. You're here to find out. But first, hello and welcome back to the channel, Upstep Financial. We're back with another video about the world of finances. We bring you content about the best financial info, so please subscribe to the channel and enable alerts to be notified of each new upload. Don't forget to hit the thumbs up button. After a lengthy wait and a slew of confusing signals over the last 2 years, there is finally some clarity on the taxes of Bitcoin revenue. Nirmala Sitharaman, the finance minister, declared in her presentation of the union budget on February 1st that revenue from digital asset transfers will be taxed at the rate of 30%. She stated unequivocally that no deductions or exemptions, other than the cost of acquisition, will be permitted. She also stated that crypto gifts will be taxed at the same rate as cash gifts. This provided a great deal of clarity to people trading in the burgeoning business. They are still wondering how their income from cryptocurrency trading will be taxed. So what are you waiting for? Without further ado, let's begin. Digital assets. Let's start with digital assets. While the government did not expressly mention crypto coins, it did classify them as digital assets, as well as adjacent sectors driven by blockchain technologies, such as NFTs. As a result, this new taxation structure is simply referred to as the crypto tax. How to calculate tax on income from cryptocurrency. The declaration in the budget for the 2022 of a flat 30% tax on the income from the transfer of virtual digital assets or VDAs, including cryptocurrencies and NFTs, has been welcomed by India's crypto community. Even if the VDA tax rate is high, they are pleased that crypto has achieved some respect by being mentioned in the official budget paper for tax purposes. However, Finance Minister Nirmala Sitharaman has emphasized that the levy of tax on income from VDAs, including cryptocurrency, does not imply that they are legitimate.
Currency becomes all. A currency is a currency only when it is issued by the central bank, even if it's a crypto. But anything which is outside of that, loosely all of us refer it to be cryptocurrency. They are not currencies.
While the imminent bill to regulate virtual digital assets will provide considerable clarification on the legality of crypto, a number of crypto investors are confused about how to calculate what taxes they owe. Budget 2022 proposes the creation of a new Section 115 BBH for the taxation of individuals whose sources of income include money from the transfer of VDAs. The proposed section of 115 BBH seeks to provide that where the total income of an SSE includes any income from transfer of any virtual digital asset, the income tax payable shall be the aggregate of the amount of income tax calculated on the income of transfer of any virtual digital asset at the rate of 30%, and the amount of income tax with which the SSE would have been chargeable had the total income of the SSE had been reduced by the aggregate of the income from transfer of a virtual digital asset. The budget of 2022 memorandum said, according to the budget memorandum, an individual's overall tax liability for cryptocurrencies or other VDAs will be the sum of revenue from the transfer or sale of such assets, plus the tax he would be paid even if there was no crypto income, according to the tax and investment expert Balwant Jain. Flat 30% tax will apply on profit from transfer or sale of digital assets, including crypto and NFTs, from next financial year. Investors should also keep in mind that crypto losses can't be set off or carried forward, Jain announced to FE Online. To explain the statement further, Sir Patnaik, partner and head, taxation, Cyril Archman Mungaldis, elaborated, it means that in case any taxpayer has earned any income from the transfer of a virtual digital asset, the said income shall be subject to tax at the rate of 30%. While calculating the income from this source, any other income earned by the taxpayer from another source of income shall be ignored. This source cannot be combined with any other source of income. If the net income from this source is positive, the same amount shall be charged to tax at the rate of 30%. When do you have to pay the 30% tax on income from cryptocurrency and NFT? According to the budget document, cryptocurrencies and other VDAs would be subject to a 30% tax beginning in assessment year 2023 to 2024. That means that in the fiscal year 2022 to 2023, all of your income from cryptocurrency transactions will be taxed at a rate of 30%. According to Jane, investors can pay tax on revenue from crypto and NFTs until the end of the financial year 2021 to 2022 under current taxation regulations. G'day, mate. We've made it halfway through our list, and we sincerely hope you enjoyed it thus far. If you have, please give this video a thumbs up and turn on notifications to be notified of any new upload. What do you think of the items on the list so far? Let us know your opinion in the comments below. Let us move forward with the video. Tax calculation. Do you have to pay taxes on both gains and losses from crypto? Losses incurred as a result of the transfer of crypto assets cannot be offset against other income and cannot be carried forward. However, the loss arising from the transfer of crypto assets can be set off against the gain arising from the transfer of crypto assets in the same financial year. This is confirmed as Dr. Suresh Surana, founder, SRM India, according to Professor Akur Sina, Associate Professor of Production and Quantitative Methods at IIM Ahmedabad. Only gains will be taxed, losses will be exempt. However, any loss incurred because of investments in this asset class cannot be set off against income from any other sources. In other words, if you incur a loss from X investments in crypto and a profit of Y elsewhere, you cannot claim that you would pay a tax on Y to X. On the other hand, if you get a profit from X from investments in crypto and a profit of Y elsewhere, you will have to pay taxes on both X and Y, Professor Sina explained. Do you have to pay more than 30% tax on crypto income? While the government needs to provide more clarity in this area, experts disagree on whether a crypto investor would have to pay only 30% tax or effectively more due to subcharges. Because this flat rate excludes relevant surcharges and fees, the effective tax on revenue from the transfer of cryptocurrencies, NFTs, or other virtual digital assets may be higher than 30%. The taxation of gains arising on crypto assets is 30%, plus surcharge and cess. The surcharge is applicable at the rate of 10%, 15%, 25%, and 37% of the tax amount, depending on the taxable income, is applicable at 4% of the tax and surcharge amount. As a result, the gains from the transfer of crypto assets can be subject to effective tax at the rate of 31.2%, 34.32%, 35.88%, 39%, and 42.744%, depending on the taxable income in case of individuals, Dr. Surana explained. Will you have to pay taxes on income from crypto or NFT drops? According to Sharat Chandra, VP Research and Strategy, Earth ID, a self-sovereign identity management platform, those who have gotten airdropped crypto tokens or NFTs as presents will also have to pay the tax. The Finance Bill memo explicitly states that no deduction in respect of any other expenditure other than the cost of acquisition of a digital asset or allowance or offset of the loss shall be allowed to the assessee under any provision of the Act, while computing income from transfer of virtual digital assets. Crypto investors cannot set off any loss arising from the transfer of virtual digital assets, and such loss will not be allowed to be carried forward to subsequent assessment years. Surpluses will be taxed and losses cannot be used to offset profits. Those who received airdrop tokens as gifts will have to pay the tax too, Chandra said. Will you have to pay taxes for holding crypto? Only when you earn an income from the transaction, transfer, or exchange of the crypto or other virtual digital assets will you be required to pay the tax. According to experts, there is no tax on crypto holdings, so if you're someone who's just going on a simple cryptocurrency venture, you don't have to worry about crypto holding and the taxes. If you don't have any virtual digital assets, you can definitely feel all good. We've explained to you how the crypto tax will be calculated. What do you think? Would you still like to invest in crypto even with these tax calculations? Let us know in the comments. That concludes today's video. We hope you've enjoyed this one, so please subscribe to the channel and enable alerts to be notified of new uploads. This is Upstep Financial, and we'll see you in our next video. Have a good day.